Welcome to the daily snapshot video update. This is being prepared Tuesday, March 22nd, where we'll briefly look at the action in the market today and then see how things look for Wednesday, March 23rd. And I'm posting another snapshot video. My voice seems to even be worse than it was yesterday. And so I tried to record a full-blown video. I started coughing and hacking quite a bit, and it got to the point where the recording was just worthless. And so I'm just going to go back and do a short-term video or a snapshot video. And I really hope I can make it through to the end without coughing and hacking. I feel fine. I just sound like one step from death. And I've got a pretty stuffy nose and all of that. But other than that, I just don't sound good. Anyway, let's go back and look over what happened on Tuesday, and it was a very positive day. We were up over 1%, in fact, up 1.13% for the day. The technical picture continues to improve. We still have overhead resistance. We're still in a range, but things continue to look more and more positive. It doesn't mean that we have clear skies ahead. Rarely does that ever happen. If you project back a little over a week ago, everybody was convinced that we were going lower, and you could make a strong case for that. Everything was negative, and it just looked like that was a real possibility given all the things that are happening right now. Well, now it looks like instead of going lower, we formed a base and now we're going higher. You're going to have people seeing the same charts that we look at, and they're starting to get more and more positive on things. And that's when you have to be careful. When, yeah, we go with what our charts are telling us, but at the same time, we have to look more at sentiment, which is back more neutral right now. We're not showing extreme fear like we were before. We're getting up to the midpoint right now. And even though I don't have a chart to show you, I will just trust me when I say that things are not at that fearful stage anymore. So you have to be a little bit careful. When we opened today, we did gap higher. We gapped right up to R1. That was a pretty high up move. Now, the previous day didn't have a really big range. So the next day's pivot points are calculated on the previous day. But then we saw follow through buying up to R2. And we had some overhead resistance. And it's a line that I drew on the chart weeks ago. We bumped right up to that, which is just about at R2. And we danced sideways for most of the day. And just right underneath this level. But then there was some late day buying that drove us above R2 and above that previous resistance, but we fell back down a little bit and we closed near the high for the day. One thing to be a little concerned with is we were below average. So an up day, a strong move up, but not a lot of conviction behind it. That's one warning sign just to be concerned with. You've got a lot of people that are skeptical of this, and that's good. The more people stay skeptical of the upward move, the more chance it probably has of going higher. When everybody starts jumping on the boat that, oh yeah, we're going higher, that's when things tend to shift. So our technicals are improving. In fact, they're pretty much positive. Without setting a new high, because we still have some overhead resistance, things are switching back more and more positive. We're still dealing with earnings until the end of the month. We have inflation and interest rates that are a big part of the scenario right now, as well as the geopolitical concerns. So the S&P could be coming out of correction territory. And I say could be because we could still drop back down. We're still down a little over 6% from the high. Maybe it's into the 5%. I don't remember right now. But that means, okay, we've bounced nicely up out of that, but we could also drop back down. But right now it's looking like we're out, well, we are out of correction territory. Are we going to stay out now is the question. The technicals are positive and getting stronger. One big positive thing that happened on Tuesday was we regained the 200 simple moving average. That's a big deal. Prices still remain in a range. We still have previous prices behind us that could be acting as resistance, and I'll show you some of that. And we are getting close to, remember that short-term top we had a few weeks ago where we spiked up, came back down, and it looked like we could break to the upside? Well, we're getting back close to that area now. And of course, the things that are happening in Russia, Ukraine, inflation, we haven't had any real economic reports to help guide things Monday and Tuesday. Well, we do have some new home sales that will be coming out on Wednesday. And then, of course, China is kind of in the background at the same time with their lockdowns, and some of their lockdowns are lessening. And what's that going to do to the supply chain? But there weren't any economic reports on Tuesday. We're still overvalued if you take the S&P by itself. If you do more of an intermarket analysis, then we're more fairly valued when you compare it to interest rates. The trend is positive, but it's still weakening because those two lines are still pretty close together. Our bias and momentum are positive. And here's the daily chart. And you'll see these red shaded areas where we've come up to right now is where we've been before. We're trying to surpass the previous low, right? About the time this whole mess got started and we broke right through that support. Well, now that this support has been violated and we danced around in this area for a while, there's a lot of action that has taken place right here. Are we going to be able to break above that? So that's kind of a critical area. And then this is the short-term top, double top that I was talking about. It looks like we were breaking out, we fell back, then we went right back up, and then things got ugly after that. So we have some pretty significant resistance ahead of us. And it's kind of interesting. If you look, here's R1, here's previous resistance. It's amazing how mathematically this stuff all comes together. So it doesn't mean we have clear sailing, but rarely do we ever have clear sailing. That's what makes studying the market very challenging. Then looking at the ADX, the lines, they have crossed over. The green line is above the red line, but we are declining still. We're showing a weakening trend. This is still a trend, but because we've seen a switch here, the ADX is continuing to decline. If it's going to switch back positive, we need the green line to be a lot stronger and the red line to be a lot weaker. Then the Arun, this is also quite positive. We didn't really see much of anything after Monday's session. Well, after Tuesday, this is a very positive signal. The green has crossed above the red and we're pegged at the top. And that's when buyers are in control. You look at other previous times when we danced along the top, that's very positive, according to this indicator. Well, we just shot up to that point right now. And we're also seeing a decrease in the selling pressure. So our oscillator, the difference between the two, has crossed above zero and is looking quite positive. Now the question is, can it stay positive? But just to show you here, you see that volume was even below what we had on Monday. So that's a warning flag just to be aware of. Then looking at our rainbow, we're coming back up. We're starting to regain some of these moving averages, but the ones that we haven't regained could be acting as overhead resistance. And this is a chart I usually wouldn't show, but we finally regain the 200-day simple moving average. And so longer term, as long as we can stay above this moving average, the long-term trend will continue to be up. The line hasn't rolled over while we were below it. Now we'll have to see, can we stay above that And if we do, then the red line will continue to go higher. And let's see, the moving average is at 44.73 after Tuesday's session, and we closed at 45.11. So we were able to significantly get above that level, and that's a positive development longer term. So what are we looking for on Wednesday? We're out of correction territory. We're still in this intermediate term range until we break through and set a new all-time high. If we even get to that point, we're still battling in a choppy range type environment. We're nearing that short-term double top that I pointed out. We still have earnings season and the growth versus value battle going back and forth. We do have new home sales, not typically a big driver in the market. And then, of course, the different geopolitical events. And I tried to rearrange this slide a little bit because, as I say in my classes, and I say this quite a bit in the videos, we need to plan for all three scenarios at the same time. Now, sometimes we might add a fourth scenario. Like for number one, we really are looking at two different scenarios here. But we have to say, okay, what's the scenario for the market to go up? What's the scenario for it to go down? And what's the scenario for it to go sideways? Well, negative, we're still kind of keeping this in the background. Where are we going to revert back to the previous trend, which was negative? We were negative. It looks like we were going lower. Then the Fed came out. That's considered a major event since they raised interest rates for the first time. And the idea was we're going to bounce just enough to wear off the extreme pessimism before we get set to go lower. That's becoming less and less likely at this point. That's one possible scenario. But I say here, is that irrelevant now? Every day we go beyond that, it becomes less and less relevant or more irrelevant. Then the other scenario is that we have some short-term indicators that are giving us overbought signals, and we also have overhead resistance. Okay, what's the scenario that we're going up? Are we coming out of that base? It's looking more and more likely every day. We've left it in the rearview mirror currently. Doesn't mean we're just going to go straight up from here, but it really is turning things a lot more positive. Our oscillators are positive. We've been able to get above the 50 and 200 moving averages. That's what a lot of traders use. In fact, the SMAC system, the simple moving average crossover system that I teach as part of my class for very long-term investors, that's the system right there. It's when the 50 crosses the 200. Well, we're not dealing with that as far as the moving averages. Well, we are, because we had a death cross. But first we have to deal with it as far as price is concerned. Then we deal with the moving averages themselves. And the moving averages are sometimes providing support and sometimes still providing resistance. We always have to be concerned with this sideways action. Now, you could say we've been in this intermediate term range for a long time, but the ADX hasn't been telling us that. And even though we've been in a range, it's been a very severe range. We've seen huge up days and huge down days. The kind of sideways market that I look at to do sideways strategies like selling iron condors, doing credit spreads, those kinds of things, we need to be in a more neutral environment where we're not really going up or down significantly. So we have been in this intermediate term range with really wild swings. Are we going to look for, or one thing to be prepared for is a price movement slowdown, which pretty much becomes trendless. It doesn't look like that right now, but if we get some real sideways action, a little bit up, a little bit down, a little bit up, a little bit down, that's what the current environment could morph into. But right now, it's not showing that. So the probable scenario right now is number two. We still want to keep an eye on number one. And then if things really start to chop sideways, then we will go down to scenario three. So how do we conclude things? Based on Tuesday's action, I've tried to switch this up a little bit as well. If I was just to say, what's the S&P doing right now? It's positive, but we're still in a range. Short term, we are positive, but showing some possible overextension in the short term. Intermediate term is also positive. Our oscillators are positive, and our moving averages are being regained and sometimes providing support and other times still providing resistance. Long term, it is turning positive if it can be held, which means can we stay above the 200-day moving average? So thank you. This was probably a little longer for the snapshot video. I just like the idea that I wasn't coughing and hacking, so I just kept talking a little bit longer. Have a wonderful day, and I'm still trying to do a full-blown video. The idea is to look at doing a snapshot video so that you can then determine if you want to go in and look at the full-blown daily video.